Hey there, I'm Bev from bookkeepingcoach.net. With over 30 years of bookkeeping and finance, I've seen it all and fixed it all. Whether you're a new bookkeeper or a business owner handling your own books, I know how overwhelming it can get when there's no one to turn to with questions. That's exactly why I created this channel. No more messy books, no more sleepless nights. Just clear, practical advice from someone who's been in the trenches. So hit that subscribe button and let's transform those financial headaches into financial clarity, one entry at a time. Bookkeepingcoach.net. Your questions answered, your business empowered. Welcome back to our QuickBooks Online tutorial series. Today, we're covering how to handle special transactions that often confuse business owners. Proper handling of these unusual transactions maintains accuracy and compliance while giving you the confidence to handle any transaction type that comes your way. I'll show you the proper way to record owner transactions that won't trigger audit red flags. You'll learn techniques that prevent common mistakes with complex transaction types. I'll also share a systemic approach that handles any unusual transaction with confidence. Understanding owner equity transactions is crucial, and it varies significantly by entity type. For sole proprietorships, owner's draws are simply money taken out of the business for personal use. Partnership capital account transactions involve multiple owners and require careful allocation. S-Corp distributions and contributions have specific tax implications and reasonable salary requirements. LLC member draws and contributions depend on the tax election chosen. C-Corp dividend and stock transactions involve potential double taxation issues. Tax implications differ by entity type as well. Sole proprietors report business income directly on their personal returns. Partnerships issue K-1s to partners showing their share of the income and deductions. S-Corps must pay reasonable salaries to owner employees before taking distributions. LLC's tax treatment depends on their election. They can be taxed as sole proprietorships, partnerships, S-Corps, or C-Corps. C-Corps face double taxation on distributed profits. Proper account setup requires understanding the owner's equity account structure. Distinguish between draws and distributions. Track capital contributions separately. Understand the relationship to retained earnings, and for multiple owners, establish clear allocation methods. Related entity transaction management becomes important as businesses grow. First, identify these transactions properly, including parent-subsidiary relationships, sister company transactions, owner entity transactions, management company arrangements, and shared service agreements. Use proper recording methodology by setting up intercompany receivable and payable accounts. Manage to-from accounts very carefully. Prepare elimination entries for consolidated reporting. Document transfer pricing to support arm's length transactions. And verify that pricing reflects fair market value. Establish reconciliation procedures, including intercompany balance confirmation, transaction matching verification, timing difference resolution, currency conversion for international entities, and a clear dispute resolution process. Bounce checks and reversals. NSF check handling requires systemic procedures. When processing initial NSF situations, receive bank notifications promptly. Assess and record any applicable fees. Adjust the customer accounts to reflect the return payment. Initiate collection processes immediately and manage your banking relationships professionally. For accounting entries, reverse the original deposit, record bank fees properly, and apply customer charges according to your policy. Make sure you track collection costs and consider write-off policies for uncollectible amounts. Prevention and management strategies include verifying customer credit before accepting checks, encouraging electronic payment methods, enforcing collection policies consistently, and preserving relationships even during difficult collection situations. Customer discounts and special pricing. Discount structure implementation requires clear methodology. manage different discount types, including early payment discounts, volume purchase discounts, promotional pricing, customer loyalty discounts, and seasonal adjustments. Recording methodology options include showing discounts as invoice line items, using separate discount accounts, taking a net pricing approach, treating discounts as contra revenue, or focusing on gross margin preservation. Consider tax and compliance aspects, including sales tax calculations on discounted amounts, income recognition timing, promotional expense classification, customer communication requirements, and policy documentation needs. NSF and bank fee tracking. Bank fee management systems help control costs and track recoverable charges. Categorize fees appropriately, including NSF and overdraft fees, wire transfer charges, monthly service fees, transaction-based fees, and cash management charges. Use proper account assignment for bank service charge accounts, customer reimbursable fees, loan-related charges, investment management fees, and miscellaneous bank charges. Establish recovery procedures, including customer chargeback policies, fee reimbursement tracking, vendor responsibility determination, bank fee negotiation, and process improvement identification. What unusual transactions have you struggled to record properly? Do you face specific entity-related transaction challenges? Have you encountered situations where you weren't sure how to handle a transaction correctly? Share your experiences in the comments below. I'm offering a free 30-minute special transaction consultation. I'll review specific challenging transactions in your business, demonstrate proper recording techniques for your entity type, and help you create policies for handling unusual transactions consistently. The link to schedule is in the description below. Thanks for watching, and join me next week for Journal Entries Demystified.